in the 19th century, classical economics all looked at the dynamic of industrial capitalism as being the free economies from rent seeking. The whole idea was that wealthy industrial nations were going to invest in less developed countries to help them catch up and spread democratic politics and public investment to modernize colonial and other developed economies. Karl Marx believed that also. He gave a speech to the Chartists, the labor organizations of London, saying that, well, British investment in India is going to end up breaking down India's backwardness, and it will help make England replicate industrial capitalism in these countries. Almost everybody in the 19th century had that optimistic view, and they said, finally, colonialism will be something positive. It'll help industrialized countries, because we all know that's not what happened. Instead, colonialism and the American Washington Consensus, today's neoliberal post-classical economics rejects the classical economic doctrine of freeing markets from rent seekers and freeing governments from control by their narrow oligarchies. Now, this is not progress. It is a post-industrial society, but it's really a relapse into backwardness. It's almost a retrogression back to feudal property-owning creditor class. And here's the problem that third world debtors face today, and that other countries wanting to withdraw from the dollar standards also face. How are they going to finance trade among themselves? US officials still relate to the third world debtor countries with a pro-creditor position. Defending bondholders, both US investors, and also many bondholders of Argentina, Brazil, and third world countries are rich Argentinians and rich Brazilians. And they know, because they control the government, that they are going to pay the foreign debts, mainly to themselves, operating out of their offshore bank accounts. And now vulture funds have taken over. And vulture funds, once the third world or the regular financial major institutions and banks say, well, okay, we realize that there's a coronavirus right now. We realize that raw materials prices are declining and that the third world countries can't pay their debts. Let's sell off our bonds. You know, we're taking our money and running. And they sell out to vulture funds who buy these bonds at just a few pennies on the dollar. And that's what's happened to a lot of Argentina bonds. There's a whole fight right now over whether Argentina can write down its foreign debts, and they're being sued by vulture funds that say, no, you have to pay 100 cents on the dollar. We spend 2 cents on the dollar to buy your bonds, and we want to be repaid 100 cents on the dollar. That's how we make the money. That is what, amazingly enough, that is what the international legal courts are having to handle. And obviously, if you buy Argentinian or Brazilian bonds at 2 cents or 10 cents on the dollar, why should you have any right to get 100 cents on the dollar? The basis of finance capitalism, enlightened finance capitalism, is we have a claim on a country. We can't get more than they can pay, so let's write down the debt to reflect what they can pay. Just like when a stock company, when a company will lose its sales markets or its export markets, the stock price declines. The debt price should decline to reflect the actual ability to pay. That is not the basis of international law today. International law says any claim should be paid at face value, otherwise send in the Marines or put sanctions on the country and foreclose on it by letting the bondholders grab whatever assets the country has abroad. I mentioned earlier Venezuela's oil distribution networks in the US and Argentina's naval ships in Africa, which actually the courts would not let Paul Singer's vulture fund grab. So the coronavirus has slashed industrial production throughout the world. It's thrown third world trade into a deficit. And the question is, how are you going to have a world system that doesn't impoverish countries by having a one-sided creditor rule? So while the US follows a debtor policy towards Europe and China and Russia and payment surplus countries, saying you have to accept our IOUs even though we can't pay them, it says for the third world and other weak non-industrial countries, you can't accept their IOUs at all. You have to foreclose and grab what they have, but you can't foreclose on us. You can't use your dollars to do what you do to Latin America. You can't use your dollars to take America's investments in your countries. You can't use the dollars to buy American assets abroad and seize them as American bondholders can seize other countries. This is the double financial standard that is the basis for America's dollar hegemony today. Now, third world countries cannot do what people were in America could do. They can't inflate their way out of debt by printing more money because their debt is denominated in foreign currencies, not in their own currencies. They can print pesos, but they can't print dollars, and their foreign debt is in dollars. So they can't get out of the debt quandary in the way that the United States can inflate its way out of dollar debt. Now, for the same reason, they can't increase taxes to raise the money to pay foreign creditors. The IMF keeps telling other countries, raise taxes on labor, not on business. The first thing the IMF tells a debtor country is to raise taxes on income taxes on labor, land, and industry. So when Argentina and Brazil and other countries do this, the taxes they raise are in their domestic currency, escudos or pesos or whatever, and they still have to convert these into dollars. And raising taxes does not help them get the dollars to pay the foreign debts at all. So the IMF is giving them bad advice. They know it's bad advice. They know it's junk advice. That's why they give it to them. It's junk advice that helps the United States, because the junk advice that debtor countries are told to do destroys their economy and lets American investors come in and take them over. So this is dollar colonialism, and it's done without gunboats. And it's done because countries willingly say, well, the American dollar system seems to be the only natural system, so we're going to go along with it. And this is what has to be changed if the world is to avoid going into a permanent depression. Attempts to pay Europe's unpayably high debts after World War I, we saw what the result was. It was all in vain. They couldn't pay. And Keynes showed in the 1920s that unless the Allies agreed to buy German exports, there was no way for Germany and the Reichsbank to earn the dollars to pay the reparations to the European allies, to pay their inter-ally debt in dollars still back to the United States. And yet the IMF and US foreign diplomacy today are still following the same disastrous policies that led to war and breakup of Europe after World War I. They're still imposing fiscal austerity and asset sell-offs. And the only consequence can be to further destabilize and impoverish countries in these countries. So this austerity policy is now being imposed on the US economy itself, because the US has developed an economic doctrine telling other countries to obey the US. And since this doctrine is the only theory that's taught in schools, American economists actually believe that that's how the US should be run. You pay the debt. The US has become so heavily indebted and debt leveraged that it believes that the way to make the economy grow, to pay off the debt, is to raise taxes and impoverish labor all the more. Well, of course, by impoverishing labor and industry with more taxes, it's even harder to repay the debt that they run up. And so America is now beginning to look like a third world country, imposing on itself for the first time the same disastrous policies that it's imposed on the third world, which is why the US is deindustrializing rapidly. Not slowly, it's falling off a cliff so rapidly. So the main battle going on today with regard to the diplomacy of dollar hegemony is that every country needs foreign exchange reserves. Every country needs to pay other countries when it imports from them, or when it invests in them, or when it sends profit to investors. Now, dollar reserves are US debt run up by the military. You don't want that. Even foreign countries that do not approve of the combination of US military spending abroad and the takeover of foreign assets must face the fact that if they don't recycle their dollars, then their currencies will rise against the dollar. The only thing they can do to protect their markets is to do what America did to Germany in 1923. It had the depreciating currency tariff, a floating tariff, so that as a currency like the dollar depreciates, the tariff against American exports will automatically rise to prevent American exports from underselling exports that are competitive of you. If the US dollar falls and that makes grain and soybeans cheaper to China, well, more power, then fine, let it fall. But you don't want you don't want or dollar area industrialists to undersell Chinese industrialists. You want to do to other countries exactly what the United States did towards Germany and Europe after World War I. You want to protect yourself from depreciating currencies, and that's the dollar's solution to everything under the kind of junk economics that it teaches in the schools. So the question is, what's the alternative to paper dollars? And the path of resistance that's taken by Russia, China, and some of the other payment surplus nations is to de-dollarize by buying gold, using their dollar inflows to buy up gold. Because gold is one of the few, everybody can agree that it's objective metal. It's an asset without having a debt attached to it. You can buy gold without financing US military spending around your borders. You can buy gold and it just sits there as an asset. You're not funding your adversaries. Holding dollars is to fund a nation that has declared that China is an adversary and that Russia is an adversary. So of course, you don't want to finance the government of a country that's going to war with you. America is going to war with China and Russia financially, economically, and in trade, and almost militarily. it's making probes military right now. So for third world debtor countries, the problem is also, how do you avoid letting foreign debt destroy their economies? Well, you have to say, we're not going to pay the debts. There was, just as there was in 1931, a moratorium on inter-allied debts and German reparations, we demand a moratorium on third world debts for the time being to avoid mass third world poverty. That's the choice, just as it was a choice back in 1931. So in the end, debt write-downs and outright debt write-offs are the only solution. And this needs to be written into the logic of international law. No country should be forced to destroy its economy to pay foreign creditors. That's a tributary demand, a demand for tribute, and it's an act of war. And in fact, such demands in the past could only be imposed by military conquest. Today, they're being imposed by financial conquest, and that's just as destructive, taking into account the decline in population that results from shortening lifespans, rising suicide rates, and immigration. Intellectual conquest is an equally important dimension. And the most important intellectual conquest was that of Yeltsin's Russia. The economy was impoverished by shock therapy that Russia was, leaders were persuaded to impose on itself. America said, you'll get rich on no time. Well, what happened is that instead of growing, the economy was bankrupted deliberately. The economy was turned over to Western representative domestic kleptocrats, and the population shrank, suicide rates rose, and the economy spiraled downward until finally President Putin came in and stabilized matters. So the destruction was both financial and intellectual, not military. America didn't have to go to war to make 10 million Russians die. More than Germany had to go to war to kill almost as many Russians in World War II. America did it simply by intellectual conquest. And so dollar diplomacy was a lever that went together with neoliberal economics, Washington consensus, and the kind of junk economics that is taught in American colleges.